The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach do we go, dear friends.
The following takes place between 2 p.m. and 3 p.m.
And we got a little bit of stuff going on out here today. I'm going to give you my call before we get into a little bit of history. And mostly it's because we're sitting around just under Dow 20,000. And, of course, to the unwashed masses, that's what they look at. I look at it as more of a psychological benchmark than anything else, especially for the unwashed. But, you know, you got to look at it as the headlines and what everybody thinks. And if you've got a 401k, you don't spend a lot of time looking at markets. You hear, oh, all-time highs. You know, you're not really racing to go sell that 401k, although every time you hear one of those, I would. But most people don't. But we've got a very interesting setup here. We're at 2281 on the S&P cash, which is up about 12 points, a little over 2 billion shares today. We've been in a market where I heard somebody, I think it was either on Bloomberg or CNBC, maybe it was Fox Business News, can't remember which one it was, but he was telling everybody about when the market was up. He said it was on light volume and it was down. He said the volume really came in. So I went through and put it in my newsletter this morning. I think it was this morning. About the volume. Maybe it was, I think it was in the Tech Insider. But the volume has been up or down within like 0.1%. I haven't seen volume come in day after day, 3.8 billion shares, and see it within 0.1% each day after day. So we haven't had a real clue in volume this week when we've moved up or we've moved down. There hasn't been anything. And I thought, oh, wow, I don't know what this guy's looking at. Maybe he's looking at some different volume than I am. But I look at the consolidated tape volume. And, you know, we're getting ready to break new S&P highs. We're at 2281.8. And I think, well, we got another 0.4 to hit high as I'm watching the ticks roll through. But, you know, I don't know what else you can say about it other than I have the horns ready. If the Dow hits the 20,000, I put together something very special if that happens. But I'm going to get to it after history, but there is a reason why I am long. Many people know that I'm probably about the biggest scaredy cat about being long this market, and I am now, and we'll talk about the reasons why. But let's get to a little history, and maybe this Dow will pop up here, and I'll get to play my little package for Dow 20,000.
That it's all just a little bit of history repeating.
And on this day in 1981, market guru Joe Granville issues a client advisory, sell everything. Granville, who brags that he deserves the Nobel Prize in economics for solving the mystery of the stock market. A year later, the market's down about 14%. Granville's rather famous for calling the market. Unfortunately, if you'd kept listening to him, by 1987, you would have lost 98% of all your money. So there is a thing called the Perma Bear. But there's also something called the Gene Dixon. And that is where you just keep making guesses after guesses. And if you're right once, a lot of times that's all it takes to be known as a big person in the market. I've been talking about the book about learning to be a super forecaster. And one of the most interesting things they had was a test of many people in the stock market. And they found out that literally, the more the people were wrong, the more CNBC had them on. And I thought that was rather amazing out there. I met Joe Granville once, long before I had any idea of why or what stock market was. The company I was working for was putting in systems, entertainment systems, and for some reason someone called in sick, and they sent me out to try to help on it. This guy was quite the showman. He had put a piece of glass about a quarter inch underneath the water level of his pool. So when people would show up to his door, he would have the maid send them out to the pool in the summertime, and he would walk across the glass like he was walking on water to impress them. He was full of it, but even a stop clock is right a few times, and he was right once then. He had some other ideas that kind of held water for me over the years, but listening to him probably wasn't one of them. But an interesting guy. On this day in 1981, becomes famous for one call, and then ends up really bankrupting all his customers. And my call. As I said, we're looking at this market, and are we still there? Are we there yet? We're almost there. Look at that here. I'm waiting for the update. 29.90. Okay, still 9 points away on the down. In fact, let's go one more out here so I can say something, because I was talking to Steve Rhodes earlier this morning, a few other folks. This, as most people know, in the last year, I've worked very hard at putting up my own database so I can ask questions. I've done it with CSV files in the past, but some of the questions were going to be too hard not to actually have some kind of system put together to do it. One of the things that I put in there was a way of figuring out how many shorts each day are in the market. The data is available, but you have to go to many sites, then you have to correlate it, then you have to put it back together with everything. One of the things I do is add up every day, what percentage of shares were shorted as the instrument for starting a trade. You never know how many people covered by the end of the day, but you know how people are active. So we can go back a little bit over 13, 14 months since we had a day where as many people shorted yesterday. So going in today, there was basically two scenarios. Going into Friday, it's going to be lighter volume. If they can't push the market down, are the shorts who are now as short, they're bleeding out their eyes short from yesterday, are they going to want to go into Friday's close and the next 2 days short, or are they going to blink? Well, if they're big men in the street, it's not their money. They don't care. But a great deal of people, I suspect, and a lot of retail are going after. So we had basically more than double the normal run rate for shorts yesterday. And I went back and threw in all the data, and it is, I didn't believe it when I first saw it. In fact, I waited even till this morning to go back through it yet a third time. But we have had the biggest amount of people dump on shorts. We'll talk about why that's important, why we're looking into next week because of one of the issues with shorting. We'll be back in a second.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Well, we're still playing right under 20,000, so I assume that it's going to happen now somewhere, maybe in the end of this hour, but more likely probably at the close when everybody has to blink. But right underneath that, everybody kind of holding their breath. I want to talk a great deal about what I've been able to do with about 10 years of short data now. And so it does take me back past the housing bubble and into 2005 and 6. Although the format I have it really started in the way it's set up now to 2010. So I keep that data, just because it's kind of a little bit apples and oranges. But the way that the market generally moves is that if everybody is short, market goes higher until the shorts give up. Now, if it's mostly big street names, it doesn't really matter. They'll just hold on for a while. It's not like they're going to blink fairly quickly. These guys, it takes them a long time to get in and a long time to get out, and they're more than willing to sit on their hands for a while. Much longer than we would as individual traders. But what we do see is that heavy shorts have two options. Either they're right, and if the right market comes down, there are a lot of people that are natural buyers. They have to buy those shares back. So traditionally, a lot of people are looking for little money. Some people are looking for big money when they short. But guess what? That downside tends to be longer and slower. But if they're wrong, the upside tends to be quicker and faster, i.e. it squeezes off all the weak hands. Shorts are always the weakest hand in any game on Wall Street. They tend to be, in fact, in retail traders, I saw some things out from, I want to say it was Ameritrade, maybe it was Daytech even before. But if you go short a stock, you're more than likely to be trading 10 times more in a year than somebody that never shorts a stock. So it tends to be very much a fast money crowd for shorting. And the markets, for the most part, is going up, about 3/4 of the time, even in a bear market. And about 1/4 of the time, it's going down. So you've got to have a very good timing, or you get squeezed out. Another thing I found out is in shorting, in my experience, and just about everybody's experience, and now it's backed up by the data that I've had over the last year, people are normally 3 minutes, 3 hours, 3 days, or 3 weeks early, or 3 years. But I suspect I'm looking at least 3 days that everybody's early. So if you went short yesterday, that would suggest that maybe at the first point that they're looking at Tuesday. Now, Wednesday is options expiration, the start of it, when everybody goes delta neutral. It would be far more likely that we spike a high that day and that we pull back than anything else. I was talking to Steve Rhodes, I think it was this morning too, and I think we said it on the air a couple of times too. I look at options a great deal. Options said that we were going to have 20,000 on the Dow come Friday's close. I thought we'd get it yesterday, and then maybe we'd have a pullback today. We got just the opposite, a little bit of a pullback yesterday, and then the pop today. This one makes a scenario where you're going to have at least a few days of shorts covering. So I can't see going short at the close. I would have to have some kind of signal. And more likely, I would suspect that we will continue going higher till at least Wednesday, and they start setting up for options market makers going delta neutral on Wednesday. And you're going to have a little bit more volatility anyway because of that organic reason in the market to do so. Anyway, you can give me a call at 877-927-6648. Another reason why I don't think much is going to go on until maybe even a week from today, that we can hang up here and not much happen, it's earnings. When we go to the 9th, we've got one big stock, and that's Barracuda. It's not really that big. And then we go all the way to the end of the week before we have Bank of America and JP Morgan. Another company, a couple of companies that could at least move the financial marketplace, but with the looming idea of higher interest rates, I suspect that they're going to do okay. So if we're looking for stocks that are really going to start getting hammered because of a stronger dollar, it's probably going to be after that Friday. So I think we could be looking into the week of the 16th before anything big happens. Okay, question on my data here. And what I do is I take all the stocks in the SPY and I put them all in equally weighted, like the equal weighted S&P. And yes, and then I average the shorts out there. So that's an equal weighted percentage of the S&P, of the stocks in the SPY. 27.4% of the initiations for short positions. You don't know how many people covered before the end of the day, but you can get an idea that many people probably went in there and kept those positions. So this was a huge move. I took the data out this morning. I re-looked at it. I deleted all the old data. I re-downloaded the new data to look at volume and everything else. And as far as I can tell, that's it. So, you know, we've got a few other things that are out here. We may see it in the quotes today. Some of the quotes are a little messed up from earlier in the morning. That's kind of a good sign that there's a lot of stress in the marketplace. But again, I don't see a lot of reasons to go running to the exit out here till maybe all the way through next week, certainly till Wednesday, because I think that we would do this. Now, another thing I love to see is that nobody shorts new highs. When I see everybody shorting new highs, I suspect that they are wrong. In fact, I think we talked about, what was it, before I went on vacation or after? I think it was. I think it was the week before, or the week I went on vacation, or getting ready to go on vacation. I think it was a Thursday. I said that the options had gone to some kind of ludicrous level that said we were going to go to 2150 before Christmas, or 2250? I think it was 2250. Some ludicrous number. We were going to go up 150 points in the S&P. And I said, you know what? I think it was 50 points that week, and by now another 100 points. I think that's what it was. And I said, you know what? When everybody goes this incredibly insane at once for higher prices, we're probably not going that way. And I think it's the exact same thing. When you get everybody deciding to jump on one side of the boat all at once, and generally they're not that correct. Generally, you wait for these guys to go ahead and slowly get out of the positions. The next time, if they short again, we're probably going to go up a little higher, even on lighter volume. What you really want to see is shorts where nobody else or very few people are shorting. That way there are very few people to cover on the way back down, and that's where you get the big moves that are worth it when you short. Anyway, you can give me a call at 877-927-6648. You can email me at path@tfnn.com, and you can, of course, post a message in the den.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're going to look at a few of these stocks that gapped up.
You served me well, hybrid. But still, you burn some gas, and so you disgust me.
That's right. Got to get rid of the hybrid and get the EV if you're going to be any kind of green person. Anyway, everybody's storming to the Tesla level. We talked about how Tesla is almost always 30 short interest. And again, one of the stocks I stay away from. Just, once you get past 15-20%, it becomes incredibly hard not to get pulled out and knocked around by just the people coming back in and covering. It makes any kind of PR stunt makes it easy to push a stock up. But again, you want to see that probably drop in half. You want to see Tesla hit maybe 15% short interest and then maybe take a stab at it. And as it continues to go up, you'll lose a lot of them. It did gap up today. It's had rather horrible news and moved up higher anyway this week. They didn't miss. They missed their earnings and at least deliveries. I don't know about the earnings. They didn't meet their earnings numbers, and no one seemed to care. Which is one of these stocks that everybody says, well, it doesn't matter, and the answer is it doesn't matter till it actually matters. But I saw some people. I think it was Lieberman. I can't remember who the guy is that's on at noon on Fast Money. But I'll think of his name here. Jim Lieberman. Lieberman, I think it is. He did some work, and I think it's an article out there. I couldn't find it. I was going to try to get it for today, but I read through it. And he did the math on this and showed this is the most expensive stock ever that actually has real sales and earnings. And I thought that was rather amazing. It's like a 400 on the book value. God, I wish I would have found it because it's kind of amazing. But very interesting to see his call on it, just on a fundamental basis, of being the most expensive stock ever in the stock market on a fundamental number. But very hot. Anyway, other stocks that were gapping around up here today. American International Group had a nice little gap up here today. It's up in the 66 range. Nice little pop out here. Going to hold around that. You want to see the close above $67.03. Amgen had a nice little pop also today. It's right up and has filled its gap. Now, if you were actually thinking short on the biotechs, this would be kind of close to what you're looking for, but still kind of a scary trade out there. I think biotechs continue to move up a little higher. Let's take a look at the IBB. This looked to me like this pattern was going to at least get back up here to the 294.36 high, which is the November 10th high. And again, this is another sector where everybody's piling in. So I would not be surprised to see maybe a well-timed press announcement come out to really start moving some of these things higher. ARED Pharmaceuticals, another one sitting up at its highs. Now, these are against resistance, but like I said, could we see just one merger, one thing come out on Friday or on Monday morning that just drives these things up for a day or two and blows everybody out of their short positions? I think the answer is yes. NVIDIA, another one with a little gap up today. Not big moves in this stock. I think this thing is probably going to get back up into the 115s yet again. At that point, you got to really be worried about Tesla moving back down, because if it does, then it can all be over. Sarepta Therapeutics. I think we talked about this one a couple of times about how well this thing looked off this big major move, and that was the gap, a little bit of a gap up, but a huge candle up on September 19th that had 51.3 million shares. You got back with one. If I had some stocks I liked a little better, but on a price volume basis, 50 million shares, 1.5 million shares. This stock is 1/10 the volume. Man, that's all you got to look at for some of these things. Even if you're only going to hold it for 3 days, you're probably going to get a pretty significant bounce. I'm thinking about this one actually longer at about 26. I'd like it to get in to at about 26, 25 or something with, again, light volume. I think you're going to get one more out here. Anyway, those are the stocks gapping up. We'll take a look at the stocks gapping down. And again, you can give me a call at 877-927-6648. You can also email me at path@tfnn.com or post a message in the den. And what else is going on out here? My phone keeps beeping. I don't know why. I thought I had it out here turned off. But it's hard to say. Let's do this. Shush. Okay. My phone should be acting correctly from now on. Okay. Sherpa Pharmaceuticals. Nice pattern, by the way. Nice pattern. So let's look at the gap downs out here. Of course, coming off of a high in crude, you had a huge spike down. And this is some of the bad ticks I was talking about. Just look at the body of the candle today. But kind of a little gap down here in the high 37s. And, is it that big a deal? The answer is not that big. But, you're just filling kind of this gap from the last few days. You want to kind of see how the volume in BP comes out today. GoPro actually stated they're going to come out with their drone yet again. It did it no good. Everybody sold it off anyway. Like I said, this one, it just looks to me like maybe even this year we might be talking about GoPro either being bought out for on the dime on the dollar, or even maybe having a problem staying in business. I think their collapse is going to be rather dramatic. Other stocks, Pandora Media, it kind of gapped down and had some wide price ranges today. Some of those are bad ticks, but we're around $12.50 on that. T, which is AT&T, got a couple of them on these, and that is this 42 to 41 gap down today in AT&T. This is a sister to TWX. A lot of discussions about how a Trump administration is going to look at the merger between these two companies, and it does not look good. In fact, some of the preliminary words for some of the people that are going to be in that in those seats, in 13 days or something, 14 days, 15 days, don't look good. So Time Warner, nice gap down today. The whole merger thing probably on the offs. Another spike out here with a bad tick, much lower for the candles. But down to about the $53 level today is Verizon Communications. I didn't look at the reason why, if there was any, but the volume's not that bad. Again, I suspect even on some of these that gap down, what you're looking for is maybe a little bit more higher out here. One more attempt at highs. And if you get a light volume at the highs, that may complete these parabolic moves or straight moves up, in this case from the November 14th level.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And if anybody, I just can't think of it right now, the 10-year bond ETF, someone can post it in the den, the ticker. I'll take a look at it. Anyway, like I said, one of these days where you kind of think maybe the highs are near, but probably not over, at least the way I'm looking at it. We'll look at the percent decliners out here. Did we already look at these? There's a few of these, I think, for the gap downs. But First Majestic Silver, probably going to see a lot of these gold stocks that pulled back today. Alamos Gold, Brazil Foods. That's kind of a very interesting move. A lot of volume in that one today on the downside. BRFS. Depot Med, this one's this got right back up to resistance and fell apart. DRD, Dr. Gold, a little pullback, kind of back to where it was yesterday on the start. Fortuna Silver Mines, another one that kind of reversed and actually lower than the open yesterday. Pretium Resources, PVG, another one out here that's lower than its high yesterday. SALT, Scorpio Bulk Shippers. This one was a very nice test. Did I have this in the newsletter this morning? I think maybe I did. Of course, no use shorting it, but a good sign that you had seen a close top. The November 17th high at $6.20 only had 2.8 million shares, but you got into that yesterday with 1.72 million shares. So certainly a little bit of difference out here. Sibian Gold, SBGL, also lower than the last two candles, so making a little dark cloud cover. Star Bulk Carriers, also a little bit of a reversal out here after these things had a big run from $5 up to $6.84 yesterday. Shake Shack, nice little gap down in this one after banging against resistance. This thing came down with a monstrous load of volume. That was back on the 11th of August with 5.8 million shares. Got into it with, is that right? 5.8 million shares. Got into it with 1.4, well, let's call it 1.5 million shares. And if very generous, got in it with 4.5 million shares. So still light. Tried to get back into it again with 1 million shares back here on the 20th of December. Didn't make any more attempt. A couple of days ago with 620,000 shares, and the wheels fell off. A rather recent IPO, so people losing a little nerve in some of these. Of course, on the back of all those retail stocks doing horribly, yesterday is yet another one doing rather badly. I suspect this is the last year for Sears. Probably will be a quick and painful death. Probably in the last half of this year. I think they've got a little bit of cash, but not enough to make it through the second half of the year. SSRI is back in the metals with a big reversal sign. And what you could look at is dark cloud cover. This one I had my newsletter this morning just because I thought it was very interesting, and that was a break of Tahoe Resources of its December 14th high that had 4.6 million shares with just 2.7 million shares. It held the high, though, but, man, it gapped down back into the trading range today. Been moving back here lower. Teva Pharmaceuticals, we talked about this one already? May not. It is another one. Did anybody in the den have the 10-year ETF for bonds? I just have a mental blank right now. I'm trying to remember what it is. I look at the TLT so many times. That's a 20-year. I just can't remember what it is. Anyway. Thanks. Oh, got another beep here. What we got? TY? Okay. Is that it? Take a look at it. I don't think it's TY. ETFs are all three. Continental? No, that's not it. Didn't think it. All the ETFs are three letters. T and X. Thank you. Every once in a while, I forget one symbol out there, and I just can't remember it. Come on, let's get some volume out here. Nope. TXN, maybe? TNX? Don't have anything. Yeah, who knows? Let's look at the TLT. Had a question from one of our guys. I normally know all these right off the top of my head. It's Ron from Bel Air Bluffs, but he didn't give me an ETF. But anyway, he's looking at this. I suspect he says he's looking for a scalp. We came back up to this big gap down in the TLT on the 30th of November. That area has been acting as resistance on the way back up. Should now be support. I just don't understand probably trying to get back in there and seeing a lot out here. The big move has been made in the TLT. We talked about that being the most important chart in bonds. I suspect that right now the risk reward is pretty poor in bonds. I suspect you're going to have a lot of back and forth movement, and it's going to be very choppy. So I don't know if I would want to be out here. I think that pattern in the TLT was so perfect up there at the top, and you came down so hard. We documented the ABC down in this thing, and we thought it would take you to 127 where this gap was, and it blew right through it and went all the way down to 116. So you have a far extension down here. I just don't see a lot out here. You're right back up to resistance now. And this thing's probably going to go sideways for a while. I don't see a lot in that. Hopefully that answers your question. Did I get it? I look like... Oh, there we go. ZN. Oh, I don't think it's ZN on my... I just don't look at the 10-year. It's another one. No, Zion Oil and Gas. Okay, well, I'll just think of it. I don't think that there's as much money moving either in the TLT or the 10-year, but we'll think about it. Other stocks of interest was move right ahead. I still don't see anything. We're at 2280 on the S&P cash, so maybe the shooting a little. I don't know if it's terrorism. I haven't heard the news. No one's posted anything in the den other than there's been a shooting. But maybe that's put a little bit of nervousness out here for the Dow 20,000 before the end of the day. Anyway, let's look at some other ones out here in my scans. Let's take, on a day like this, up at highs, you want to look at 52-week lows and see the worst of the worst. Venger, don't know much about the stock. AVGR, looks like this thing has had a horrible time. Dries, this thing went to almost $100 and all the way back down. Just going lower, got to 296 today. Again, we talked about it before. We'll talk about it when we come back. Reverse splits are the absolute biggest curse in the market and have the highest correlation to lower prices. Watch out anytime you see reverse splits other than in those triple ETFs. But if it's in a stock, it's almost a certain kiss of death. We'll talk about this when we come back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're come back. I wanted to bring this up because we're talking about a lot of broad brush approaches to the stock market now. But I saw an article in Stocks and Commodities magazine. I got to say, it's probably circa 2004 or 5 or 6, somewhere in there. And I went back and took a look at it, and it is true. In fact, I just looked at it over Christmas yet again. I went back through all the splits and reverse splits to get stocks back higher are normally the death knell of a stock. It tells you that there's a great chance that the stock is going out of business. Not always, and if you're just trading it, sometimes you can, but you have to be very aware about what's going on. This stock was at one time, I don't know, $1 billion or something, with all the reverse stock splits to come out of this. I don't forget exactly what it was, but pretty high. In fact, it got to $97. They did a fairly great job of figuring out a way to squeeze all the shorts that were stuck in this thing from the very high. Now it's come back down. But what you can say about stocks that are reverse splits is about, depending on which time frame you look at. I looked at 2 years after they reverse split. It was about 80% of them went out of business, and that goes back into the 90s, into the 2000s, and actually even in the last couple of years, we're starting to see that really come back again. And that is be very, if you start seeing a lot of gaps out here, things like reverse splits, keep an eye on them. They are a great indication of lower prices to come. We're looking more at some of these with 52-week lows. Express Incorporated, EXPR, again, making a new low out here. Volume, though, may be interesting. And that is that you had a major low on December 1st with 15 million shares. Yesterday, 2 million shares. Today, 1.8 million shares. I'd have to do a lot more research, but start taking a look at some of these out here that are back on very light volume. And what else did we have out there? Steinmart, Kohl's, some of these other retailers, and including, TJ Maxx, look like they're starting to put kind of a pale on it. I've been to Steinmart, one of my favorite places to shop for golf shirts around here. But, man, they've been very thin on product for the last year or so. And normally they've been a pretty good place to share. I'm not surprised that these guys have come off. And I don't know if it's a better or less retail out there with less product to say some of these discounters, but hadn't been a good year for them. And, of course, what else could you say about VIX and VXX out here? But they continue going down. I haven't seen anything. We talked about it at length one day. That you really have to understand the VIX and what it is. If you don't read the white paper and really understand what's going on with the VIX underneath these leverage products, you won't understand exactly how these things move. But many times there are places where you can buy this where your back is literally to the wall. They probably won't go down for a little while. But that's not one of these times. Both of these are making new 52-week lows, including the VXX out here today. So keep an eye on these. Normally when they get down in these last $5 marks like the VIXY, they get down in this area, they do yet another reverse split. And it seems like the market stays up until those reverse splits go through. Just to keep an eye on them, we'll see you Monday. Remember to sell when you can, not when you have to. And again, Monday, we're back. Same bat channel, same bat.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.